Hey guys, so today's video is about top 5 reports that every business owner must look at and what to analyze while looking at those reports. So, top 5 reports. So, number one report out of these 5 reports is P&L, profit and loss report. Okay, let's pull it together. So, we go to reports, profit and loss report. Okay. So we look at profit and loss report, not just you can do a report for last month, last year, or any kind of period you want to pick. What I like doing is pull it in few different ways. For example, not just pulling like the last few months, pulling the last few months as compared to last year. So I would pull, for example, 1/1/24 to 9/30/24 in comparison to last year. So I can see January to September 2023, and I can compare 2024 January to September to last year. I don't have, this is a sample file. I don't have any data in here, but you will. So, yes, so this is how you compare. Look at the differences. What changed? Is it a positive change? Is it a negative change? Purpose of these reports is not just looking at them. Purpose is to analyze and plan for the future based on the changes that are occurring in your business. So yes, so do analyze. Look at the last few months reports, like YTD report this year versus YTD report last year. That's one way of comparison. So another thing I like doing is I like pulling the report month by month. So I don't need to look at the comparison anymore. What I do want to do is I want to pull the report month by month. So I'll just go to display columns by, and I can customize the same reports to show month by month. So this way you can see what's going on month by month. Is your revenue going up or down? You can see everything here. So the revenue is here and it's actually going up, which is great. Look at the cost of goods sold, look at the various expense categories and everything. So you should analyze the trend, basically, what's going on in your business, and plan accordingly for future. Okay, so do pay attention to one more thing. Look at cash basis and accrual basis both. And if you're only cash basis business, just pull cash basis. And if you only care about accrual basis, and that helps you analyze your business more. And that's my preferred method too, of analyzing financials, because that's the true picture of your business. So if you do keep track of your books on accrual basis, do pull the reports on accrual basis as well. Okay, so those are the 2 ways to look at your profit and loss. Now, another way to do it is go to totals again, and you can look at the percentages. Okay, so what percent of your income is being spent on what type of expense? So you can analyze here. So this business has this business is spending like 4.5% on the cost of goods sold. Look at the biggest expenses in your business. For example, 16% on legal and professional fee here. Total expenses are 72%. And look at your gross profit, net income percentage, and again, plan accordingly for the future. This is a report you should look at least once a month. At least once a month. Otherwise, you wouldn't know what's going on in your business and how to plan for future. Okay, now you could do this analysis with each month as well. You can pull the report by month and do an expense analysis on that. So this is how the report is going to look like each month. What percent of revenue is going into what type of expenses? Okay, so that's how you would analyze your profit and loss report. Now, next report, second report is balance sheet report. So let's go back to reports and click on balance sheet. Okay, so with balance sheet, I'm going to pull the balance sheet up to last month. So a few things to analyze with balance sheet as well. Make sure your bank account balances look good. They make sense, because a lot of the time business owners depend on bookkeepers, and they are relying on them completely. That they are saying, "Oh, bank accounts have been reconciled." I'm not saying it happens all the time, but sometimes it does. And so business owners are dependent on bookkeepers to tell them if the reconciliations have been done or not. But sometimes there are so many extra transactions sitting in your bank accounts and credit card accounts, even though the accounts are reconciled. These extra transactions are throwing off the balances of your bank accounts and credit card accounts. So just look at this report, make sure the balances make sense. It's not like you are expecting $100,000 in your checking account and your QuickBooks is showing 50,000 because of all the extra transactions sitting in your file. Same thing with the credit cards too. Analyze, look at the balances and make sure they seem right. Okay, and then we'll go through the accounts receivable, accounts payable as well. I'm going to show you separate reports for those. But just glance through it, make sure it makes sense. For example, the assets are showing up. It's not like you have a security deposit sitting with your landlord for like $50,000 and it's just nowhere on the balance sheet. So you have to make sure that shows up. Um, and accounts payable, we're going to pull another report on that as well. Liabilities, and you want to make sure there are no like payroll liabilities or any kind of liabilities showing up or any loans showing up which you have already paid off. And that could be a result of bad bookkeeping too. But anyway, you as a business owner should be looking at those things. Now, any car loans. So let's say you have an auto loan that you, business auto loan that you are paying from your personal account for whatever reason. Make sure it's recorded here. Make sure the payments are being recorded here too. Um, okay, and just make sure the balances look right. They look reasonable to you. Yeah, notes payable, same thing as other loans. Yeah, so these are the things you should be looking at. And balance sheets too. You can actually look at the comparative one for last year and see what kind of change you're seeing from last year, for example. Your bank balances are going up or not. What are you exactly doing with your cash? Accounts receivable, is it going up or down? Accounts payable, is it going up or down? Again, the purpose of looking at these reports is to analyze the historical data and plan for future based on the same data, based on that data. Okay, so next report we're going to look at is accounts receivable aging summary. So you can look for accounts receivable aging summary in using this magnifying glass, or you can go to report section and get it from there. I am just using a shortcut and just going from here. Okay, AR aging summary. So that's the report number 3 that you should be looking at least on a monthly basis, at least. Okay, look at the accounts receivable. This aging report is gonna tell you if you have overdue invoices. So if customers haven't been paying on time, then you should be making strategies to collect on those invoices and don't let them get too old, so past due that your customers are not even interested in paying it anymore. It just gets harder to collect on these invoices as they get more and more past due. So yes, so do keep sending the clients the reminders for these invoices and adjust the payment terms or something and just stay on top of it. Another thing with accounts receivable aging summary is you might have some customers who have already paid, and according to you, they have no balance, but QuickBooks shows you a balance due for those, or the other way around. You think you signed up a new client and you should have a balance in QuickBooks for them, but you don't see it in QuickBooks. So again, that requires additional analysis. So go to the customer accounts and see what's going on with these customers' balances, these customers' accounts. Why aren't the balances showing up when they should be, or why are they showing up when they shouldn't be? Do that analysis and fix the problems. Okay, number four. Number four report is a similar report to this one, which is now accounts payable aging summary. Okay. And you can look at the details as well. Details would tell you more about like which invoices exactly are overdue, which invoices exactly are paid but still showing up as due or something. Now, this is on the accounts payable side, right? What is overdue? Why aren't you paying the bills? Maybe you should pay the bills to keep a good relationship with the vendor. Look at these bills and see if you're analyze if any of these vendors are ready to offer you like a discount on early payment. Maybe they already do. So don't delay paying those. You could if you have the cash flow, make the payment on a timely basis and get the discount that your vendor is willing to offer you. So that's the purpose of AP aging summary too. Again, same similar thing like accounts receivable as well. Review all the vendors' accounts and see if all these balances make sense. Actually, again, maybe for example, there could be one vendor which you are paying always every month, and still you're seeing like 91 and over balance of like $1,000. So just I'm just using that as an example. But there could be a vendor, you will see the balance like 91 days over or whatever, 91 days past due or something. But you might realize like, oh, this is a vendor I pay on regular basis, what's going on? So that might be an accounting error too. So you got to get it fixed, to see a clear picture, to see an accurate picture of your financials. Yes, so that's about accounts payable aging summary. Again, you can pull a detailed report too. There's another detailed report available too if you want to go here and search for aging, and it does show you AP aging detail as well. Same thing with AR aging detail as well. So those reports go into like invoice level details. Great reports to look at. Our last report we're going to look at is called budget versus actual report. Now, to create that report, first you have to make sure you have a budget set in QuickBooks. QuickBooks Online Plus or Advanced, they let you create a budget in QuickBooks itself. So it's a great tool. You can create a budget based on exact chart of accounts that you have in your QuickBooks file. So I'll show you one. So this is the budget format you're gonna get. Based on the left hand side, you're gonna see all the accounts that you have in your chart of accounts. For P&L, this is a P&L budget. You can create one for balance sheet as well, but this is a P&L budget. So create a budget, enter the numbers, the budgeted numbers that you are expecting for next year. When you're done with that, you can pull a report actually, which is called budget versus actual report. Now, I love looking at this report because this report shows me exactly what's going on in my business, meaning what did I expect my business to do and where is it going? Where did I expect my business to go? What was I expecting and where is it going actually? And it compares the two. It tells me, so month by month, I can look at my data. For example, June, this is what I budgeted for. This is what the actual numbers are. If it's over budget or under budget, and what the percentage is, and it helps you analyze why something is happening. For example, there could be reasons for these variances. Maybe you're spending too much on marketing project, but that could be that could be for a really good reason, meaning you got a really big project, and to collaborate with somebody, but now you have to spend money on marketing, but at the same time it's going to increase your revenue too. So you have to analyze the numbers, not just look at this report, be like, oh, my marketing budget is over by whatever, like it's 50% over than what I expected. But again, there could be a very valid reason for that. For example, your revenue is going up too, but then it's a good reason, right? Your marketing budget went up by 50%, but at the same time, your revenue went up by 75% because of spending more on marketing. So you have to analyze the budget versus actual report. So yeah, that's what you need to do with this report. Look at the budget, look at the actual, analyze the variances. Why is it different? Is it a good reason? Is it a bad reason? And work on it. And every month, look at this report so you can plan for next month better, based on this analysis. Adjust your cash flow projections so you can budget for there might be reason that the marketing expenses are really going up with not much increase in revenue. That could be just the normal increase in the cost for everything, right? So yes, so do adjust your cash flow projections based on that. That's what you need to do with these reports. Now there are some additional reports too, you should look at. I'm going to put those into the description, like expenses by vendor summary. How much are you spending with each vendor, for a certain period of time? You might want to go to a different vendor after analysis. You might want to find an alternative vendor or something. So do look at them. Yeah, and being a business owner, it's super important to look at these reports. Just you got to analyze that. Doesn't matter who's doing your bookkeeping, who's doing your accounting, who's your controller, whatever. At the end, it's your business. You should be looking at those reports, not just relying on whatever people tell you. Even if you spend like 10 minutes, every month looking at these reports. So do look at them. Hope you like this video. Do subscribe to my channel, and thank you and happy accounting.